Welcome everyone. Today we're delving into the fascinating world of stocks and cryptocurrencies, focusing on the interest from institutional and retail investors. It's a world where the traditional meets the modern, where old-school stocks rub shoulders with the new kids on the block, cryptocurrencies. But before we dive in, it's essential to remember that we are not financial advisors. The content presented is purely for informational purposes and should not be construed as financial advice. It's vital to do your own research before making any investment decisions. We're here to provide you with insights and perspectives to help you understand the landscape better and to spark your curiosity. It's a journey of discovery, of understanding the dynamics between institutional and retail investors, and how these two groups approach stocks and cryptocurrencies. So buckle up as we navigate the intriguing corridors of institutional and retail interest in stocks and cryptocurrency. To begin, let's clarify what we mean by institutional and retail interest. Understanding these two types of investors is crucial in grasping the dynamics of markets, whether it's stocks or cryptocurrency. Institutional investors are big players such as pension funds, mutual funds, insurance companies, and hedge funds. They're often characterized by their large capital base and their ability to influence market trends. With their vast resources, they can execute sizable trades, often impacting prices and liquidity in the process. They also tend to be more sophisticated, employing teams of analysts and using advanced trading systems. It's important to note that they're subject to stricter regulations, which can affect their investment decisions. On the flip side, we have retail investors. These are individual investors who trade for their personal accounts. In contrast to institutional investors, they usually have less capital and therefore less influence on market trends. Retail investors often rely on basic analysis, financial news, and sometimes their gut instincts. While they may not individually impact the market as much as institutional investors collectively, they can cause significant shifts. A recent example of this power is the GameStop saga, where retail investors banded together to drive up the company's stock price. The impact of these two types of investors on markets cannot be underestimated. Institutional investors, with their hefty trades and strategic moves, often set the tone for market performance. Retail investors, on the other hand, can bring vitality and unpredictability to the markets, making them more dynamic and exciting. It's also worth noting that the line between institutional and retail investors is becoming increasingly blurred, thanks to advancements in technology. With trading platforms becoming more accessible and user-friendly, retail investors now have tools and resources that were once exclusive to their institutional counterparts. With these definitions in mind, we can now compare and contrast institutional and retail interest in stocks and cryptocurrency. So, buckle up as we delve deeper into the world of investing and examine the interplay of these two distinct yet interconnected forces. Let's turn our attention to the big players first, the institutional investors. These are the heavyweights, think hedge funds, pension funds, and insurance companies. They possess the financial muscle to make significant moves in the market, and their choices often set the tone for retail investors. In the world of stocks, institutional interest has been a long-standing phenomenon. These investors typically have a long-term perspective, investing in companies they believe will grow over time. They use sophisticated tools for research and analysis, making informed decisions based on a company's financial health, industry position, and growth prospects. However, the landscape is changing with the advent of cryptocurrency. Initially, institutional investors were wary of the volatility and perceived lack of regulation in the crypto market. But as the crypto space matured, we've seen a shift. The allure of high returns and the potential of blockchain technology has drawn institutional interest to cryptocurrencies. Today we find institutional investors dipping their toes in the crypto pool, some with more than just a casual splash. They're investing in cryptocurrencies directly, in crypto-based financial products, and in companies heavily involved in blockchain technology. But this new interest is not without its risks. Cryptocurrency markets are more volatile and less predictable than traditional stock markets. A sudden swing in crypto prices can lead to massive gains or losses. Moreover, while steps are being taken to regulate the crypto market, it's still a relatively ungoverned space compared to the well-regulated stock market. So, why the shift? Well, it's about diversification. Cryptocurrencies offer a new asset class, uncorrelated to traditional financial markets. This means, even when stocks are down, cryptocurrencies could still perform well, providing a hedge against market volatility. In this tug-of-war between stocks and cryptocurrencies, Institutional investors are playing both sides. They're balancing the stability of stocks with the potential high returns of cryptocurrencies, shaping the future of both markets in the process. Clearly, institutional investors play a significant role in shaping both the stock and cryptocurrency markets. Now let's shift gears and explore the world of retail investors. Retail investors are the everyday individuals who choose to get involved in the stock or cryptocurrency markets. They might not have the financial clout of institutional investors, but they certainly pack a punch in terms of sheer numbers. This collective power can move markets, as we've seen in recent years with the rise of meme stocks and cryptocurrencies. In the stock market, retail investors have traditionally been seen as less influential than their institutional counterparts. However, with the advent of commission-free trading platforms, the balance of power is shifting. These platforms have democratized investing, enabling more people to dip their toes into the financial markets. This influx of retail interest can create new trends and even disrupt established ones. On the other hand, cryptocurrencies have been a retail investor's playground from the get-go. The decentralized nature of cryptocurrencies means that retail investors can have a significant impact. The surge in popularity of cryptocurrencies such as Bitcoin and Ethereum is largely driven by retail interest. This has brought about significant benefits such as increased market liquidity and price discovery. But with these benefits also come risks. The volatility of the cryptocurrency market can be a double-edged sword, offering the potential for high returns but also significant losses. And while the stock market has regulations in place to protect investors, the cryptocurrency market is still largely unregulated, which can leave retail investors vulnerable. Moreover, the influence of social media on these markets cannot be overlooked. It's not uncommon for the value of a stock or cryptocurrency to skyrocket or plummet based on trending posts or tweets. This highlights the importance of doing your own research and not just following the crowd. As we can see, retail investors bring a different dynamic to the table in the stock and cryptocurrency markets. They offer a fresh perspective and can drive innovation, but their influence also adds a layer of unpredictability. It's a fascinating world and one that's constantly evolving. So, whether you're a seasoned investor or just starting out, it's important to stay informed and make decisions based on your own research and risk tolerance. Having explored both sides of the coin, it's time to draw some comparisons. We've seen how institutional and retail interests shape the world of stocks and cryptocurrency, each playing its unique role. Institutional interest, on one hand, brings a significant amount of capital into both markets. This substantial injection of funds often stabilizes prices and reduces volatility. The downside, however, is that it can lead to market manipulation, as these big players have the power to sway the market in their favor. In the world of stocks, we've seen this time and again. In the crypto space, it's a relatively new phenomenon, but one that's quickly gaining traction. Retail interest, on the other hand, brings a different flavor to the table. Retail investors, the everyday folks like you and me, contribute to market liquidity and ensure that there's always a buyer or a seller on the other end of a trade. This is crucial for the smooth functioning of both markets. Retail investors also bring diversity to the market, investing in a wide array of assets, from blue-chip stocks to the most obscure altcoins. However, retail investors are often more susceptible to market volatility and can sometimes make impulsive, emotion-driven decisions. The stocks and cryptocurrency markets also share some common ground. Both are driven by supply and demand dynamics, and both offer opportunities for savvy investors to make a profit. The key difference lies in the level of regulation. The stock market is heavily regulated, offering a certain level of protection to investors. The crypto market, in contrast, is still a wild west of sorts, with less oversight and more risk, but also potentially higher rewards. In conclusion, both institutional and retail investors have unique roles and impacts on the stocks and cryptocurrency markets. The interplay between these two types of investors makes for a vibrant, dynamic, and ever-evolving financial landscape. Whether you're a big institutional player or a small retail investor, there's room for you on this thrilling roller coaster ride of investment opportunities. To wrap up our discussion today, we've delved into the complex world of institutional and retail interest, particularly in relation to stocks and cryptocurrency. We've dissected the differences, the pros and the cons, all to help you better understand these two financial realms. Our journey took us from the fundamentals, defining institutional and retail interest, and then diving into the unique characteristics of stocks and cryptocurrency. We compared and contrasted these two investment options, highlighting their unique features and potential benefits. But remember, as fascinating as these insights are, they are not financial advice. It is crucial to do your own research, to dig deeper, and to make informed decisions based on your personal financial goals and risk tolerance. Thank you for joining us on this journey. Remember to like, comment, and subscribe. Don't forget to hit the bell notification for updates on our new videos. Until next time, keep exploring.